So the numbers are in, and that means it's time for another real estate market update. I'm bringing you the Knoxville real estate market update for January 2023. And we're going to get started looking at those numbers. Welcome back. This is All Things Tennessee, and I'm Ben Barredo, a local real estate pro and relocation expert with Coldwell Banker Wallace here in East Tennessee. In this video, we're going to cover the numbers for the month of January 2023. They just came out, but before we jump into that, make sure you hit that subscribe button, hit that like button. I really appreciate it. And if you need a realtor for any reason, give me a call. My contact information is in the description. It's also floating around right here somewhere. Now, let's jump into the more important part of this video, the real estate market data. So the numbers for the month of January are in, and I thought I'd give them to you real quick. I didn't even set up a green screen. I was so excited to get them to you. Now, as always, I like to start off with a broad view of the real estate stats for the entire country. I got this information from Realtor.com if you want to go and check that out yourself. That way we can compare the U.S. economy numbers and then we, with the Knoxville numbers. Now, let's start it off with active listings. For the U.S. as a whole, there were 65.5% more homes for sale in January compared to the same time in 2022. This means that there were 248,000 more homes available to buy this past month compared to a year ago. While the number of homes for sale is increasing, it is still 43% lower than it was before the pandemic hit in 2017 and 2019. This means that there are still fewer homes available to buy on a typical day than there were a few years ago. Which brings me to my next number, total listings. The total number of homes for sale, now this includes both those homes that are for sale as well as those that are pending, increased by 13%. That's a growth accelerated from last month's 6% growth rate because homes are spending more time on the market, but the growth rate in total number of homes for sale remains lower than active inventory because there are still fewer homes under contract. Speaking of homes under contract, the number of homes that are pending, aka under contract, declined by 40%. This is lower than December's 37% decline, which could mean that the housing market is starting to stabilize, but at a relatively low level because of existing home sales activity. However, this could change if the direction of inflation as well as mortgage rates changes in the months to come. Next up is new listings. These are listings that just hit the market in January. And that number is actually in decline by 5.4% compared to this same time last year. This is a much lower rate of decline than last month's 21% decrease and November's 17.2% decrease. However, new listings remain 25% below pre-pandemic 2017 to 2019 levels. Now, days on market's up next, and the typical home spent 75 days on the market this January, which is 13 days longer than the same time last year. All right, next up is median list price. The national median list price remains stable compared to December at $400,000. However, it is down from a record high of $449,000 from June. That's an 11% decrease. This median list price represents a yearly growth rate of 8.1%, which is only slightly lower than December's 8.4% growth rate. Listen, if you haven't seen it yet, check out last week's video where I discussed the pros and cons as well as what it means and how to sell a home as is. You can watch that by clicking right here, or you can follow the link in the description. Also, if you're thinking of selling as is, maybe because of deferred maintenance or you don't have money to invest in repairs, maybe it would help to do a quick pre-listing inspection or pre-spending inspection by basically go in the description. There's a link to download my DIY pre-inspection checklist. It will help you by giving you an outline that you can follow point by point, so you can go through your house and see if you got issues to be concerned about or if maybe you're just being overly cautious. All right, now we've got the U.S. economy out of the way. Let's take those numbers from above and compare them to the Knoxville real estate market. First off, we're going to start with active listings. And active listings are actually up 58% from this time last year, Reason being, because buyer activity has slowed. But new listings are still entering the market. So we are kicking off the year with more choices for buyers than we have had in the past 2 years. And compared to where we left off in 2022, inventory remains about the same, which is not at all unusual. Next up is new listings, because we're talking about listings hitting the market. And while we ended 2022 with fewer new listings coming on the market compared to years past, we started 2023 at about the same level as we started 2021 and 2022. So I am interested to see if more homes hit the market as the weather warms up and the spring season starts to come upon us, or will the sellers just sit back and enjoy their low interest mortgage payments and be hesitant to get out there and join the buyer's market and possibly have a higher mortgage payment on their next property due to these higher interest rates. Now, next up is pending listings, and it's true that more homes went under contract in the past 3 Januaries compared to last year. This number is down 28% from January 2022, but we are still above pre-COVID years. Even with softened buyer demand, the listings that are available are being claimed quickly. Maybe not as fast as they were last year and the year prior, but they're still coming off the market in record time compared to years pre-pandemic, which is better than most of the country right now. And that segues to the next point, which is closed units. The number of closings is down to pre-pandemic levels. This is what is meant by the market returning to normal. Yes, compared to 2021 and 2022, when we were at record highs in January, it feels like a low, but we have to keep the perspective that the bottom has not dropped out of the market. We are just trying to get accustomed to from a temporary pace, which was the fast pace, to a more normal pace. Now, months of supply or inventory is up next, and we are at 1.13, which is about 82% from last year's 0.62 absorption rate. We still are very much a seller's market is the main point of that. If nothing else was listed today, we would be out of inventory in a very fast amount of time. Next up is median sales price. This is the number that is slowing sales, in addition to current mortgage rates also adding to that fact. But then again, the purpose of the interest rate hike was to slow growth. With all the talk about prices plummeting, I think it's clear to see that our area, that in Knoxville, prices are not what they were back in May, but they are still high for January. Next up is average days on market. Now, we hit the middle of the number here compared to previous January data. Average days on market is just about 42 days. This might feel like a new and worrying pace for home sales, but it's not really new. Sellers still wonder why their homes aren't selling in hours. But if you're selling a house and you're wondering why you didn't get 1 million offers the first day on the market, just slow down. It's okay. Just make sure your agent's doing what they promised they'd be doing as far as marketing. Otherwise, the sales pace today is actually still fast compared to pre-pandemic years. It's just a normal pace, and we were just used to that incredibly fast pace the last 2 years. But it's okay. It's all normal, and it's all relative. Next up is showings. Now, this is an important number to look at because it gives us a good perspective on buyer activity. And I was surprised to see that January showings were up compared to other previous Januaries. So what this shows me is that it's taking more showings for houses to get under contract. It also tells me that there are buyers out there looking for houses, they're just not finding the right one, which makes sense since houses are sitting on the market a little bit longer than they were last year. Basically, we're seeing a shift in the market. It's a small shift. In some areas, it may be bigger. Prices are coming down slightly for buyers. They are getting to see some leverage, though we're still very much a strong seller's market. And overall, it's better to be a seller today than a buyer. That doesn't mean it's a bad time to buy. Just be ready to work for it and don't expect huge savings, but be happy because last year you were overpaying for houses for the most part. Well, that's it for today's video. I hope you found it helpful and informative. As always, I appreciate you stopping by, giving me some of your time, and I'll see you next week. Have a great day. Bye.